If you want to see more detailed images, videos, and the full article, check the link in the description. Recent U.S. military strikes on Iranian nuclear facilities have sent shockwaves through global energy markets, potentially leading to a significant price surge at Australian petrol pumps. The escalating tensions in the Middle East, following earlier Israeli strikes on Iran, have already driven a more than 20% increase in oil prices this June alone. This translates to a concerning outlook for Australian motorists, with analysts predicting petrol prices could reach a staggering $2 a litre in the coming weeks. The impact extends far beyond individual fuel costs. The International Monetary Fund, IMF, has issued a stark warning, highlighting the threat posed by energy market turmoil to global economic growth. Higher fuel and power costs will undoubtedly exacerbate the already challenging cost of living crisis for many Australian households, further straining budgets already stretched thin. This volatile energy landscape is also influencing monetary policy decisions. Economists predict that the prospect of higher energy prices could force the Reserve Bank of Australia to delay its next interest rate cut, potentially postponing it from July to August. This delay reflects a cautious approach aimed at managing inflation amidst rising energy costs. The international oil benchmark, Brent crude, experienced a dramatic spike, briefly surpassing $80 a barrel on Monday morning before settling around $78. 12. This upward trend reflects growing concerns about potential disruptions to oil supplies. Iran's Press TV reported the Iranian parliament's approval of a measure to close the Strait of Hormuz, a crucial waterway through which approximately one-fifth of the world's oil passes. Adding to the anxiety, Bloomberg reported that two oil supertankers approaching the strait made abrupt U-turns following news of the U.S. strikes. While CBA energy analyst Vivek There believes Iran is more likely to employ symbolic measures allowing for de-escalation, he acknowledges the potential for more severe disruptions. There suggests that missile and drone attacks targeting shipping in the Strait of Hormuz remain a possibility, which could send oil prices soaring to $100 a barrel, a scenario with potentially catastrophic global economic consequences. Currently, Brent crude hovers around $80 a barrel, caught between these two contrasting outcomes. The implications for Australian consumers are stark. There are estimates that oil prices at the current levels of $75 to $80 a barrel would translate to petrol prices rising to between $1.90 and $2 a litre, a significant increase from last week's average of $1.75. A surge to $100 a barrel could push prices to an unprecedented $2.30 to $2.40 a litre, placing an even heavier burden on Australian households. AMP chief economist Shane Oliver offers a slightly more conservative estimate, projecting a $2.13 a litre price at the pump if oil reaches $100, still resulting in a substantial weekly increase in petrol costs for the average Australian household, an estimated $74.55 per week, or approximately $14 more than currently. This added expense, he argues, would significantly impact consumer spending, further slowing an already sluggish economy. Oliver also highlights the inflationary impact of higher fuel and energy prices, estimating an increase of 0.3 percentage points in headline inflation, potentially more in a worst-case scenario. This reinforces the case for the Reserve Bank to hold off on rate cuts until the situation stabilizes. Barrenjoey Capital Partners chief economist Joe Masters echoes this sentiment, emphasizing the uncertainty created by the escalating tensions and suggesting the RBA should defer a rate cut until August to assess the overall impact on inflation and economic growth. The IMF's managing director, Kristalina Georgieva, voiced concerns about the wider ramifications of energy market instability, warning of potential secondary and tertiary impacts on the global economy, already burdened by factors such as Donald Trump's tariffs. She emphasized the risk of downward revisions to global growth prospects should the turbulence in oil markets persist and intensify. Market strategist Steve Miller at GSFM Funds Management expressed surprise at the relatively muted reaction in financial markets, noting only modest selling in share markets and limited buying in safe haven assets. He questions whether the market underestimates Iran's capacity for retaliation, highlighting the potential for serious economic consequences. Miller points to the U.S. economy's current precarious position, flirting with stagflation, and warns that escalating oil prices could exacerbate this situation. The combination of high inflation, low growth, and a substantial U.S. deficit creates a potentially volatile economic climate. The unfolding situation underscores the complex interplay between geopolitical events, energy markets, and the broader global economic outlook, with significant implications for Australia and the world. The uncertainty surrounding Iran's response to the U.S. strikes, coupled with the potential for further escalation, keeps the world on edge, awaiting the next chapter in this rapidly developing situation. The coming weeks will be critical in determining the full extent of the impact on both energy prices and the global economy.